we are at the very crucial moment in terms of giving trust to the housing finance and the mortgage. Well, lot much of benefits and the support has come in. What are the key aspects that the system or the regulators have to consider for giving further impetus to the growth?
Yes.
Can
Yeah.
summarize?
Yeah, absolutely. This is one important thing is that there's been a lot of institution building in the industry, mortgage industry particularly, and the whole ecosystem has been promoted towards de-risking the sector.
Right.
Now, once we have mitigated the risk through different kinds of institutions like CERSAI, like RERA, like trade bureaus,
Correct.
and digitization of land records, with all that happening, the overall confidence of all these stakeholders has gone up.
Correct.
And that is something which is very fundamental for this institution building, and it will be there for the long term. So as a result of all this, even the financing institutions also are more comfortable in lending, in expanding their financing to both individuals, particularly the retail loans, as also on the supply side. So there has been a good amount of institution building and promoting of market infrastructure, as I would call it. So all this has resulted in a very balanced development of the whole ecosystem around housing and mortgage industry.
Now,
With this will in fact give a bigger impetus. Now the government's policies and specific schemes and programs can be promoted and implemented more effectively because of this market infrastructure. That is one. Number two, we need to really step up the amount of funding for housing sector, because still we are at about 10-11% of the GDP is the mortgage penetration, and the demand being very high. We need to really scale up, and for that we have already built the institutions. The lending institutions are there, the construction agencies are there, but now we have to switch gear a little and move towards green housing, climate friendly housing, climate resilient housing. Those are important areas of concern also. So through housing, we can develop a green environment also. We can do more environment friendly housing, less carbon emitting housing, more solar powered housing.
correct.
But to the individuals, particularly in the lower segments of the population, for whom affordable housing is very critical, the overall supply of land, management of land, and more efficient construction of units for that segment of the population is very, very important.
In that respect, then the credit guarantee, which is the gradually coming course, is that what
Yeah.
more steps need to be taken?
Exactly. So now the mortgage guarantee is a very important element in improving both flow of funds, mitigating the risk for the lenders, improving availability of credit, and improving affordability of credit. Because now the lender is protected by the guarantee. He can pass on the benefit of that to the borrower. I don't agree that the premium of the guarantee is going to be unaffordable or be an extra charge. Lender who is being protected by the guarantee, his risk is mitigated better now, so he can transfer a little bit of that benefit to the borrower by way of either sharing the guarantee fee or keeping the guarantee fee to the lender themselves and not passing it on to the borrower. That's one. We have the Mortgage Guarantee Corporation, IMGC, is playing a very, very important role in promoting the mortgage guarantee, and that is linked to the flow of funds to all segments of the population.
Are the lenders still hesitant in terms of taking this as a cover and then building their own rule book? Because the size of the IMCG's outstanding is still very modest.
I would also, in this context, share my thoughts on the regulatory aspect. The regulators have to support this product, which is very important, and that would mean that the regulators should understand very clearly the benefits of mortgage guarantee, how it is flowing into the system, how it is playing out in the entire ecosystem of housing, and the regulators should come out and promote that by way of regulatory guidelines on risk weights, on provisioning, the mortgage guaranteed loans should carry lower risk weight, on some regulatory provisions or regulatory relaxation or for the mortgage guarantee company itself. So these are the regulatory issues which need to be addressed by the regulator, which will add to the impetus and the effectiveness of mortgage guarantee.
How would you look at the negotiation of giving or asking financiers to give funds for land purchases, which is quite crucial element in entire house building? How you look at that sort or idea which has come forward?
Yeah, exactly. So I think, as I talked about the institution building and the market infrastructure, which also mitigates the risk of lending to the builders. With the RERA coming in, with SASI being there, with digitization of land records, etc., all that is going to protect the lenders against their exposure, not only to the retail housing borrowers, but also to the builders. So now a situation has arisen, there is a whole ecosystem operating within which the lenders can be allowed, rather should be allowed, to finance land purchase also by the builders. See, the land purchase, it's not that the lenders are going to provide 100% of finance. They should keep the value, LTV, very low for land purchases, 20%, 30%, and let the builders bring in their additional equity. As a result of which, what happens is that overall cost comes down and it improves the affordability for the ultimate borrower. Otherwise, the builders are forced to borrow in the market at a much higher cost, which adds to the cost of the unit and which gets passed on to the builder, to the buyer, by way of a more costly house. So it's not promoting affordability. If the builders are allowed, if the lenders are allowed to lend to the builders for land purchase also, and that should be monitored and regulated well. Now it's the RERA age is there. There will be there's a lot of transparency in the market. The availability of information is all there in public domain.
Yes.
So all the elements are there for the lenders to factor in their decision to lend to the builders for land purchase also. And ultimately, it's going to be beneficial and more affordable to the borrowers. So the land supply will keep coming in. There will be no shortage, and the continuous stream can be there, and the money can be circulated. They pay back to the lender again pays to the builders, other builders. So overall supply management will be much better if the lenders are allowed to lend to the builders for land purchase.
Any thoughts on how the interest rates currently are being charged for mortgage, not the lab, but the plain house? Is there any further scope to change so that it can be brought down, or current rates are reflecting all the risk as well as the cost of funds?
Yeah, I think this is very important. But at the same time, there are different categories of lenders.
Correct.
So, for example, there are banks, housing finance companies, NBFCs. And for all of them, cost of funds is different. So banks have the lowest cost of funds. They will be charging a more competitive rate of interest to the borrower. Similarly, NBFCs and HFCs have a relatively higher cost of funds. So their lending rates may be a little higher. But all this is kind of a market dynamics will play around this in the normal way. There's nothing unusual about it. And this little differential in pricing will be there, except that each lender has to have a risk-based pricing also. Now, the kind of lending which they are doing to the profile of the borrower is supposed to be more risky, or there is some informal sector borrower where the operating costs can be very high. There, it's a risk-based pricing, which will mean that the lenders may charge a higher rate of interest. There could be differential pricing, and that's something very, very novel and useful, and it's not any aberration or anything.
It's good that you really think that you have thrown light on various aspects of the industry with support required and current market situation. Thank you, sir.
Thank you, sir. Thanks.